9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Our top stories today, energy markets remain in whipsaw territory. Investors weighing what could be the largest ever oil increase from IEA. The Trump White House mixed messaging on the war in Iran.
A frenzy over OpenClaw grips China, with consumers and tech firms rushing to embrace the open source AI program.
More on China's AI industry coming up. We speak to the co-founder of AI cloud platform Tuya about the growth strategy and their global expansion plans.
And I'm Stephen Engel in Beijing, where China's most important political gatherings of the year are drawing to a close today and tomorrow, as attention now really sort of pivots to Donald Trump's visit here later this month and early April for that summit with Xi Jinping.
Yeah, it is still a market that is very headline driven here. At least oil markets are concerned, given, as you talked about, the conflicting sort of messages we're getting from the White House. But at least in the last hour or so, it was that Wall Street Journal report about what the IEA is planning on. The calmer heads are really kind of helping here when it comes to the volatility and stemming that in some way.
If it needs to plan, quite a big number too, right? 182 million barrels. Yeah. You got to wonder, to your point, we were just having this conversation right before we came on set, whether it was a matter of supply because supply was simply turned off because storage was filling up.
Yes.
It's moving and transporting the stuff. That's the key issue right now. That goes into the mixed messages around what really is taking place in the Strait of Hormuz, the amount of traffic that's going through. This report of mines, and then Donald Trump, of course, coming out, the president saying, we're going to address that if, in fact, Iran is looking to plant just a lot of naval mines as well. But yes, it's headline driven, to your point, which is why I guess when you look at markets, we're really seeing very strange things taking place, which normally don't coexist. Well, I'll get to that in a moment.
Yeah, I think it all started kind of with the Energy Secretary of the U.S., Chris Wright, when he came out with this post talking about,
what post?
Vessels were being escorted through the Strait of Hormuz, and then it was taken down, and then Caroline Leavitt had to come through, and it just became so confusing that at one point I think oil markets were sub 80 at one point, and then we kind of flipped back up, and now this IEA report kind of puts things back into a little bit more of a settling territory. But it just goes to show that the Iran strategy from the U.S. administration right now is in some ways quite conflicting and confusing too.
Yeah, we'll show that to our viewers later on, of course, that exchange as far as the White House is concerned. But two messages, right? I think what we can take away. One is things have not settled. When you look at Brent vol, for example, that's coming up on your screens, 10-day vol is now at historic levels, effectively comparing that to the Ukraine war, which is in blue, the global pandemic, which is in pink, the global financial crisis in orange, Desert Storm in the late 90s, right? Now, even if this goes away, say this settles, if this goes away, we're still stuck with the inflation issue because oil is still up 40% year to date. So we're still stuck with that issue as well. So markets are trying to just figure out which is the lesser evil at this point in time.
And it seems like the worst case scenario is stagflation, right? Which is what people are starting to worry about. If we continue to see this conflict continue and prolonged, does this mean that it's going to be even harder for central banks to really cut rates? So there's that. And then I really want to talk about OpenClaw, but it's really got these headlines that are really overshadowing what we really want to talk about in China, which is this frenzy that's going on with OpenClaw right now, and the lobster husbandry. Have you seen it?
Yes, that's the term right now. It was they've always been their lobster, as they say, and it's taken on really the primary mover when you look at markets going into the close yesterday, right? 10 cents, Minimax, and what have you. Overnight, you had Baidu as well. We'll get to that in a moment. But yes, these are two separate stories, and I imagine the latter will be still front and center when you look at these Chinese markets coming online right now. That all being said, Brent is coming online right now, up 1% in the early moments there. New York crude is 0.6%. Just looking at the intraday really doesn't do justice to the amount of swings we've seen of late. Let's have a look, please, at the Nikkei 225. So I alluded to this, too. It's quite rare that you see the cash market is up by that amount and The Nikkei Vol Index is also up by quite substantial amount. So you are getting still hedging coming through amidst the rally taking place. Taiwan within that, this is perhaps the window to tell you this. TSMC, of course, in terms of monthly sales. Jan and Feb, that number is out, 1.7% to the upside. S&P futures are better by about a third of 1%. So we talked about this. You had earnings coming through. Alibaba was up overnight. This tech rally, again, very much in focus. NIO's an earnings story. We'll see what that looks like as far as the listing this part of the world is concerned. A50 futures, last we checked, are slightly to the downside. Oil coming up, and dollar China was back above 6.9. And as you can see, in terms of the dollar coming through, 687 right now on dollar offshore.
Yeah, and really, we talked about the latest confusion over U.S. policy over Iran. Really, it started with that now deleted post on X by the Energy Secretary Chris Wright talking about these sort of U.S. escorts. And then really what we heard was this pretty interesting exchange from our own BN reporter, Hadriana Lowenkron, with Caroline Leavitt in the White House, really trying to clarify what really is the strategy moving forward. Take a listen.
Can you explain why the Energy Secretary posted and then appeared to have deleted a post on X saying that the U.S. Navy escorted an oil tanker through the Strait of Hormuz?
Yes, I was made aware of this post. I haven't had a chance to talk to the Energy Secretary about it directly. However, I know the post was taken down pretty quickly, and I can confirm that the U.S. Navy has not escorted a tanker or a vessel at this time, though, of course, that's an option the president has said he will absolutely utilize if and when necessary at the appropriate time.
And if this was something that was posted erroneously, could it be because of a staffer? Will there be any consequences for this? I know you still have to consult, but just generally speaking.
Again, I would defer you to the Department of Energy to answer that question.
And if I could just follow up really quickly. Sure. In terms of oil sanctions, the president said that there would be some sanctions that would be lifted. Would those be on Venezuela, Russia? Could you give some specifics there and then timing for that as well?
Sure. I know it's something that the Treasury Department and the president's energy team continue to discuss, and they will ultimately consult with the president before decisions are made. I don't have any announcements on new sanctions or the lifting of new sanctions for you today.
Derek Wallbank, our senior editor, is with us right now with the latest. Derek, more question marks now than we have answers. Split the difference for us between that exchange. What message do you think we should be taking away at this point?
Well, David, I think that there's two sort of buy, sell, hold questions that people have here, right, from a market perspective. One is, when's this going to end, right? It's going to end soon or it's going to end later, right? So that's the first one. The second one is, when does energy flow get back to some semblance of what people have thought of as normal? Those two things are very closely connected, but not necessarily the same thing, right? The idea that the U.S. would be doing ship transits through the Strait of Hormuz and sort of like opening that corridor would be relevant to that second point, but maybe not the first. And I say that to say this. That's why when you see these comments from the United States, which is a principal actor in this comment about whether they're going to stop soon or whether this is almost mission accomplished or whether this is going to continue on for weeks to go, right? This is why you're seeing that sort of whipsaw in the markets that you saw in U.S. trading hours. This is why social media posts from the U.S. Energy Secretary are so important. This is why you see markets move when Caroline Leavitt makes those sorts of comments there. And all of this kind of, I think, takes together you're seeing a situation right now that big oil companies and countries around there are calling some of the most disruptive that we've seen in many people's living memory in the region, not least of which, on top of that, the sort of humanitarian situation that's going on there and the geostrategic, fate of what happens in the Middle East and the makeup of the whole region. So there are a lot of really huge questions going on right now, and there has been a lot of sort of back and forth in terms of this messaging, and that's really explaining a lot of the volatility that you're seeing across major existential questions.
There seems to be also confusion about the fact that Iran might be laying mines across the Strait of Hormuz. What do we know at this point of the situation there?
Well, we have seen some media outlets report that something like that had started. Donald Trump came out and said that the U.S. did not have information to suggest so, but then came out and said, and we got CENTCOM posting video of some strikes on what the U.S. said were inactive mine boats, and so there is a sort of messaging about, if this is going to happen, we're prepared to kind of have a go at it. Trump made a threat towards Iran if they were going to be placing mines, that would be dealt with quite harshly. Said that if they had done so, to remove those would be a positive sign. I think that idea, relevant to whether or not that is a passageable waterway, is, I think, a very, very key one. And certainly you've seen the fact that there have been blockages and a sort of effective closure to most of the ship traffic in that vital energy waterway. You've seen production cuts in major oil producing countries across the region accordingly that have used the Strait of Hormuz. And this is part of why there's such a big focus on it. But again, getting to that question of that sort of uncertainty and volatility there, when you have something that's this big of a deal and you don't know whether or not it's open or not, or going to be mined, and you have to pick up mines and go through that process, I mean, you're talking potentially on weeks of getting this back open if there has been action taken like that. So it's not a question of flipping on a light switch and back it comes. It's a question that this may take a very long time to normalize, even if everybody made a decision to put down their guns and normalize tomorrow. It doesn't fix itself right away.
Good point. Derek, thank you. Derek Welby, our senior editor, joining us from San Francisco. Let's get to our executive editor for Asian markets, Paul Dobson, now. On really just the market reaction, I think, there's been a lot of volatility, Paul, when it comes to oil markets. But as soon as that journal sort of report on what the IEA might be prepared to do in terms of releasing some of these reserves seems to have calmed markets a bit. You see dollar weakening, stocks are popping higher as well. Talk us through the price action right now.
Yeah, I think you're right, Yvonne, that it has definitely added to a supportive environment for financial markets that have priced in quite a lot of the bad news already. I don't think that this was entirely unexpected, and that's why you're seeing quite modest reaction, but nonetheless, gains in equities markets and a weaker dollar, so broader gains against the dollar for currencies around our region, for example. I think that as I said, the release is not unexpected. They've been talking about it for a couple of days. When they first signaled that this was a possibility, the market responded pretty favorably. I think that what Derek was saying is right. Yes, of course, it depends on how long it can go on. But I also think that perhaps the market at the start of this week got a little bit too excited about how quickly there would be a supply crunch. There's a lot of oil all around the world in these reserves. There are efforts to divert flows, so they're finding other ways out of the Strait of Hormuz as well. And so, the market is adapting and adjusting and trying to find the best way that it can keep on going for as long as possible. With the amount of interrupted flow that we're seeing, you could assume that the market might be able to keep on going for 4 to 6 weeks before reserves are run down to levels where they were maybe last year, and when the prices were in this kind of bracket where we're at right at this moment in time. And with the reserves coming into play as well, it's just a question of getting that oil to the right places at the right times. There's more of a challenge than the actual supply-demand picture for a reasonable amount of time.
Paul, meanwhile, though, there's a separate theme that's dominating China, and the early pricing suggests that the OpenClaw phenomenon will continue to be an area of focus in Chinese markets. Talk to us about Chinese tech today.
Yeah, David, I think it's good to be able to talk about something other than the heavy situation in the Middle East. And this is a little bit more of an optimistic picture in the tech space where, the embrace and enthusiasm for OpenClaw is really kind of bouncing around Chinese tech sector at the moment, with more and more companies adopting it, bringing it into their systems and allowing people to use it. Now, flip side of that, of course, is that this creates a lot of security questions as well, because in order to use it, you need to allow it access to a lot of your personal data and information as well. And so there are those qualms and concerns about how far it can go and whether guardrails are necessary. But at the same time, the adoption and the efficiencies that you can get from it seem to be taken by the man on the street as worth the risks, and therefore, there's enthusiasm for the companies that are bringing it on board.
Paul, thank you. Great context there as we, again, try and wrap our heads around how big the playground is at the moment on the tech and also on the market side. Paul Dobson in Singapore for us. Just ahead here, we'll talk more about this. We're diving into this enthusiasm for OpenClaw AI agents as it ignites really the stock rally and local tech companies coming through.
Well, we'll be speaking with JPMorgan Asset Management's Oliver Cox on why he thinks the AI model might be the best thing he's seen since the iPhone. And we're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is The China Show. As we talked about, right, it's OpenClaw and all about this. That's really kind of reignited the whole tech space in China here today. So we'll see if we can see another day of this as well. Certainly there's been some local media talking about the security risks that Paul Dobson did tell us about here, but certainly it is certainly been a catalyst and overall when it comes to all sort of AI plays here. Yuan strength certainly is one thing we continue to deal with here today. We're talking about the CPPCC that is closing also. So we'll get the latest from Steve on the ground. There is a CGB sale, still watching HIBOR, and of course those southbound flows, Dave.
Yeah, following the massive day buying we had on Monday, we had almost the complete opposite, a lot of selling on Tuesday, so we'll track that closely today. HIBOR, so two things, right? Lower rates, we're at the verge of falling below 2% today, and of course we're getting more, because of the strong currency, Morgan Stanley's now come out and said more buying as it pertains to Hong Kong homes from mainland buyers too. BYD, conversation around F1 as the brand and the company goes global. We have earnings reaction from NIO coming through, earnings coming through from Cathay Pacific today. Akeso was also out, and some Ascletis Pharma. So a lot of stuff. We'll talk about all of that once we get into all of that in a moment. But of course, all things lead back to AI and tech, given everything that's taken place last 24 hours.
Yeah, let's get more on this whole OpenClaw frenzy. We kind of missed it, given just what's been going on in Iran this week, and bringing our Asian tech correspondent, Annabelle Jewelers, on. Yeah, what exactly is OpenClaw?
Yeah, so essentially the sort of tagline, I guess, of this is that it's an AI agent that doesn't just chat, it actually does stuff. And that's what's different about it. So most AI tools, you go to them. So for instance, you go and access ChatGPT, you access Gemini, you're going to it. The idea of OpenClaw is that it comes to you instead. And so it runs 24/7 on a server, it connects to your apps, and it takes actions without you asking. So just to sort of break it down into the three main ideas, there's the brains and the memory, so it connects to AI models via API, and the idea is that it retains that information, it gets to know you, and it improves over time. The second is, as I said, that time, it's running 24/7, and the tools and actions, because it can connect to things like Telegram, Gmail, Slack, Discord, a lot more, and it can do things on your behalf. So just some of the examples that we've been hearing about is, say, for instance, every morning at 7 a.m. you can ask it to check your calendar, read through your emails, and then give you a list of priorities for the day. If your gym classes only open up 24 hours or 48 hours before for registration, you can program it to automatically register you instead. I mean, there's lots of different ways that you can use this. And as I said, the idea is that it's connecting either via your PC, you can connect to it via the cloud, or you can connect to it on a Mac Mini or some sort of isolated hardware. So a few different ways to access.
Yeah, Tencent is up another 4.5%. In the pre-market was up 7% yesterday. What have what have Chinese companies done?
Chinese companies have maybe, we've been talking about hyperdrive, but it certainly seems like it's gone a level higher in China, essentially. And that just, is down to how much big tech companies in China are encouraging people to access this technology and also bringing out their own tools that are complementary to it as well. So yesterday, for instance, you mentioned Tencent. I mean, yesterday they had the best day in about a year, for instance, for the stock, and they released their own AI agent that is compatible with OpenClaw. Jipu is another name we've been tracking, and it recently launched a local version of the software. Minimax, for instance, I think this is exceptional, but Minimax launched an AI agent back in February that's built on OpenClaw. Its market value is now above Baidu.
That's crazy.
And it just listed 2 months ago. It's phenomenal numbers. Of course, it's not all good. We had a note out from Bloomberg Intelligence, for instance, yesterday, talking about Tencent, Alibaba, the pressure this could put on their cloud margins, for instance, moving forward, because using these types of tools consumes a lot more tokens. So they really need to be able to monetize that infrastructure. But yeah, as I said, the frenzy is real, and it certainly seems a lot more in the mainland.
And even that lobster emoji just popping up everywhere, right? Like,
and you can see the visuals of people online wearing like the lobster hats and things. So it's
all because of the claw, I guess.
Yeah, exactly.
We'll talk more about the trending segment. There you go. It made its way.
Yes.
Yeah, this was some meeting, right, about just talking about OpenClaw, and you see all those hats coming through here. I love it. You see in the post too, they're using the emojis. In social media.
Yeah.
Belle, thank you. Annabelle Jewelers there, tech correspondent, on the latest of what's been going on with OpenClaw. Of course, take a look at that when it comes to whether we see another day of this. It's pretty mixed so far. In fact, Tencent continues to chug along higher here, up some 4.5% once again, but Jipu and Minimax are falling some 3% here, so maybe a bit of consolidation on that front. But certainly here's your pre-market in Hong Kong right now. Just given when it comes to the Iran headlines, things are actually slowing down, or at least not as risk off here, and you are seeing the Hang Seng up about 0.6%.
Right, welcome back. Hang Seng is up 0.6%. Hang Seng Tech, and you'll find out in a moment why. Tencent is up a further 4% in the pre-markets today, 4.5% in fact there. So could 600 be on the cards as far as today is concerned on the stock price itself? Cathay's out with earnings later. BYD, of course, said to be exploring getting involved in F1. NIO, of course, is an earnings story and a series of upgrades coming through there. Up similar amount overnight, up about 15% going into the open today. China oil's on the way down last we checked. Should be coming up on your screens given all the vol that's coming through across these markets. There we go, across some of the big oil plays in China. And lots more coming through here as it pertains to the Chinese market. So there's obviously the Iran complexity to come through as well. There's a complexity that's done as far as going into the big meeting between the two presidents coming up in a couple of weeks. And we understand based on our reporting, it's ruffled a few feathers. More on that in a moment. The open is just ahead. All right, welcome back. Two main concepts markets are grappling with: the amount of oil that's flowing through, or the lack of it, the Strait of Hormuz, and lobster husbandry.
Yeah, we'll unpack what this whole OpenClaw frenzy in China really means here right now. But it is something that is really reignited this whole software trade when it comes to AI in China, right? When you have big tech companies that are, embracing this, deploying this AI tool, some of the startups are also kind of boosting their own sort of adoption, and then you have local governments in Shenzhen and Wuxi, offering subsidies for people to actually use it.
Download, yeah.
And when you're really helping with app development, I mean, that is enough to create almost like this cult-like following in the mainland here right now. But yes, there are the security risks, which we have heard in local media that we need kind of flag about too. But right now, that certainly is helping the Hong Kong space. Here's what onshore markets are doing. We're slightly to the upside here. We're just moderately higher in the CSI 300, just above that 4,700 line. Shanghai crude, so interestingly, is still coming off some of the initial lows, but we are still down about 10%. So, I mean, maybe not as volatile as what we've been seeing with Brent and WTI in the last few hours, given that IEA, apparently according to the Wall Street Journal, is set to release one of the largest reserves release ever since, I think, the Russian war, or even larger than during, larger than the Russian war, too. Yeah. So that was enough to at least calm some of the oil traders out there, but still a lot of lingering questions about what the exit strategy is going to be. But there you go. A lot of moving parts in terms of some of these large caps here today. CATL continues to stand out given its earnings that came out just a few days ago. So certainly that's the one thing to watch as well. We're watching the Hong Kong Open, and here you go. The tech space obviously is on fire again, and we're watching that HS Tech is up 0.6%. Alibaba, Tencent, Baidu are all higher here this morning. So these are some of the tech giants that really have been promoting this viral AI software of OpenClaw. That's certainly one thing to watch here. Property and some of the banks are seeing a bit of pressure here this morning. It is a stronger renminbi, just given the dollar moves we've seen. Dollar did weaken on the back of that journal report, too, on what the IEA may be prepared to do as well. Flip the boards and take a look at some of the movers. So we're watching, of course, earnings. So NEO. So first is BYD. So said to be exploring an entry into the F1. That could be one thing that would be quite interesting as well. NEO, we did see the fourth revenue beating estimates, and I think it's one of the first profits they've reported quarterly. So certainly that is enough to boost the stock by close to 16%, following what we saw in the ADRs overnight. Cathay is next to report as well. Interesting to see what they say about this whole Iran situation, given how fluid it is here right now. But they've had to cut down a lot of flights around the Middle East as well of late. So we talked about oil, we talked about airline stocks. We got to talk about what we're seeing too when it comes to the oil markets, right? We said, at one point we were sub 80, and then we're now back up, because there is still a lot of confusion about what the U.S. strategy is in Iran right now. So it's a mixed picture across some of these oil names here, but it is mostly, I guess you could say, lower. And then let's talk about OpenClaw, right? So it's not just the tech giants, it's the software stocks, it's the startups, right? The mini maxes, the moonshots that have been really talking about deploying this type of technology. And there you go, Zhipu is up another 5%, Minimax is up some 2%. Dave, you talked about Minimax at one point. Now the market cap is even larger than the likes of a big tech giant like Baidu now. It's quite remarkable. Yeah, I think that headline, it surpassed it, I think, yesterday. Here's a statistic for you. So Minimax is trading at 500 times revenue. I'm curious to hear what JPMorgan thinks about that. They're joining us at the top of the next hour. Of course, they're looking at this specifically too. So the enthusiasm is coming up against this. I wouldn't say pushback, but warnings coming through from regulators here about the security risks of your data, right? Yeah. If you put it on a platform, there is a risk, of course, that makes it out there. The People's Daily, in fact, posting that interview with Wei Liang. He's the vice president of China Academy of Information and Comms Tech, warning of significant security challenges. Just something to keep in mind amidst this enthusiasm, of course, around the embracing of this technology, and as people, of course, are rushing and literally lining up to download this app as well. We'll dig into that a bit later on as well on the show. The other story that we're tracking here as well is we are wrapping up, of course, the big meetings over in Beijing. Of course, it's been somewhat overshadowed by the Iran story, but certainly when you look at how those two things come together, in a couple of weeks there is this meeting between the two presidents, and does one affect the other? Stephen Engel, who's been covering the story for us on the ground in Beijing, joins us right now, our Chief North Asia correspondent. Steve, how does this affect preparations for this upcoming meeting between the two presidents?
Well, we all know that China likes to have choreographed state visits. And this one, they are highly anticipating the visit by Donald Trump in just 3 weeks' time from now, at the end of March and then early April. And the sources are telling Bloomberg News that I think there's some frustration building within the halls of power here in Beijing, even while they're going to be wrapping up the NPC tomorrow. And that is, there's only 3 weeks left to get all the preparations. And the complaint and the concern is that the U.S. side maybe is distracted because of what's happening in the Middle East, because of the rejigging of the tariff mechanisms at the White House following the state or the SCOTUS ruling, making many of his tariffs illegal. So there's been rejigging, obviously, and distractions in the White House that has not necessarily led to assuage the fears that the Chinese organizers have for this state visit, because China, like the NPC, there's a reason why the NPC is held once a year. It's highly choreographed, and they have a year essentially to prepare for it and to get their ducks in a row. There's not much time now, and the fear is that because there's not any agreed to deliverables on either side, that this could be sort of one dictated by spontaneity, which Donald Trump, let's face it, I think he thinks that's an advantage, his spontaneity. But then it could potentially, from the Chinese side, make it go off rail and also sort of go down to the low-hanging fruit and not get to areas perhaps that Xi Jinping wants to talk about. Less on trade and more on strategic key issues. So we'll have to see. We did hear as well, guys, that the Chinese had actually allegedly or reportedly offered late April to give them more time to possibly get the preparation going. Last time when Trump came here in 2017, Trump sent his Secretary of State, I think it was Rex Tillerson, also his Secretary of Commerce came to China to lay the groundwork. This time we have not had such high-level meetings. We are having Jameson Greer, the U.S. Trade Representative, as well as Scott Bessent, the Treasury Secretary, meeting their counterpart He Lifeng in Paris this weekend. But again, 3 weeks to go until Trump arrives here on Air Force One.
And it seems like this whole Iran situation is really just complicating things. It seems the Foreign Minister Wang Yi has been speaking with the Qataris, I believe on a phone call reportedly. Tell us a bit more about what sort of diplomacy we've seen when it comes to the Iran situation now.
Okay.
Sorry, guys,
Okay.
we lost audio connection, so I didn't hear the question. But let me just riff a little bit further on some of the preparation concerns that the Chinese have. One issue is the Taiwan issue, because one thing we've heard as well is Taiwan sources have told us, okay, well, I'm going to send it back to you guys. We're having lots of communication problems out of Beijing today.
Yeah, it's okay. Lots of sort of tech issues here and gremlins. We'll work things out and bring you back, Steve, coming through here. But yeah, our Chief North Asia correspondent, Stephen Ingle, joining us in Beijing. Let's bring in Hao Zhou, economist at Guotai Haitong Securities. Overall, I mean, I know the Iran situation has really kind of dominated the headlines, but in terms of NPC, anything that stood out to you that really is something that was interesting?
Thank you for having me here. I think the most important keyword is the tech and the physical in NPC. I think we talk about the claw, and everyone will have its own claw in the future, and everyone will have their own robot in the future. So basically, which means that technology will be the key technology, a part of the driver of the economy for China in the next couple of years. And I mean, in the meantime, we believe that the physical policy will be important. We know that oil price is volatile, that will limit the room for monetary policy in China. But the physical side, definitely, there were more kind of, expansionary in China. We see that, the debt ratio is about 4% of GDP. It's stable, but basically, which also means that, when the government needs it, or the government can still, pump up the money into the market if needed. So basically, I think, we have a strong start of the Chinese economy at the beginning of this year. We saw the export numbers today was really, really strong, and PMI okay for now. I think in this case, basic, which means that probably China will have like about 5% growth this year. Maybe the range is 4.5 to 5%. But basically, I think there's still kind of highly likely we see close to 5% growth for this year.
Does having a 5%, let's say they hit the top end of that range, does that address the employment, the weak employment market? In other words, has the relationship between GDP growth and employment changed, given the role of technology and everything else? And I wonder whether or not we should be looking at employment equally as important as growth.
I think, two things here. Basically, AI will kill some jobs, definitely, not only in China but globally. But in the meantime, we know that technology will create some new jobs. We visit a lot of factories in China. We see that, the new guys, the young guys, they are just graduated from good university, and they are kind of doing a lot of technology-related jobs in China at this moment. And we see that the AI model or this kind of thing all need a lot of kind of high technology talents in China. In the meantime, I think the service sector will help absorb a lot of employment in China laborers as well.
Okay.
We know that I came, my hometown was in Jiangsu province. Okay. We know there's a very famous kind of
Tell us.
The football league in Jiangsu province, and every city will have its own kind of team, and every weekend you can go to different cities to not watch football but also do a lot of tourism, enjoy the food there.
Okay.
So this will happen I think probably in April. It'll take about 4 months, and basically in the whole kind of summer we'll see a lot of football fans come into Jiangsu province and take the high-speed train and spend a weekend in a big city, in a city there.
It's interesting, right? Because we did a great piece about, maybe not in Jiangsu, but in like parts like Guangdong, which are big manufacturing hubs.
Yeah.
People are struggling to find jobs right now, and this whole sort of AI, wave is really kind of killing a lot of these, factory workers' jobs. Yeah. And yes, it brings up productivity, but then again, it's not enough to really boost consumption, because consumption and spending is still so low in China. So how do you see the whole consumption space in any way? Are you seeing any sort of meaningful sort of signs that maybe consumption is actually coming back?
I think, I'm very positive on that. Basically, we can see that, the ratio of the services consumption as 7% of GDP is relatively low in China. And in our opinion, it will take some time, maybe 10 years, to reach a relatively, medium level globally according to the global standard. So basically, I think, the service sector will help quite a lot in terms of this. Of course, the factory job, especially the labor-intensive jobs, will be lost due to the AI, due to technology. But we know that, a lot of people do the social media. A lot of people, I went to also some cities in Guangdong province during the Chinese New Year, because my wife saw something on TikTok and she said, okay, we have to be there. And we do see a lot of people in province in city like Shantou. They look at their gathering together and try the food there. And of course, the bad thing is that the restaurant is really, really expensive. Hotels is crazily expensive there. But we can see that this creates some demand, and the local government already saw this is kind of a problem, but also creates some kind of demand for labor, and especially for service-related jobs there.
Yeah.
Your outlook on inflation. So we have a couple of two-part questions. So we now have the spike in oil prices globally. Is that going to be somewhat welcome news given the efforts to boost inflation in China? And do you think we might get consumers, can they absorb that? Whether that's temporary or more prolonged, we don't know still. But where is your mind on that?
Well, maybe China has a low inflation issue. They want to see kind of a relatively high inflation. But I don't think oil price is a good kind of driver for that. But of course oil price might be driving inflation a bit higher. But probably possibly we are from PPI inflation to CPI inflation.
That's right.
Path through, China will be there. So in the meantime, I think, if we look at China's history, when the oil prices surged, basically the inflation might, take some also a spike in the short term, but in a relatively long-term perspective, it all still, depend on the fundamentals.
Okay.
For example, in China, during the 2008 global financial crisis,
right.
There was also a spike in the oil prices at the beginning. The CPI inflation picked up a little bit, but gradually, calmed down. So I think, from this kind of perspective, what we have to really have to think about here is that normally speaking, we see oil is an external shock. But this kind of shock, happened from time to time. Whether this will be constantly a problem in the future, this also means that China, for example, need a lot of alternatives for oil,
That's
for
coming
energy.
too.
Yeah.
This, for example, new energy.
I was going to get you to react to some of those export numbers that we got yesterday. I mean, they were double digits and really kind of surpassing expectations. A lot of it had to do with where these exports were going, to non-U.S. destinations now. Where, is that going to be a problem at all this year, just given the fact that, it seems like a lot of these nations have already dealt with the most of it, U.S. tariff policy, but, China, when it comes to exporting some of their cheap products and the like, I mean, is that going to be an issue this year?
The most important thing here is that when we look at these numbers, the good thing is that the volume growth right now has outpaced the value growth in China in the first 2 months of this year. This is kind of,
Why is that important?
They will somehow, basically reduce some kind of concerns for investors, because they always think that there will be kind of a price competition among Chinese corporates. And the second thing is that, even the exports to U.S. has declined by another kind of double digit, but actually it's narrowed compared to last year. And in the meantime, we see that the good thing is the product mix is good, because the China's export a lot of kind of semiconductor, we say chip, ship, and auto. These kind of things in the rest of the world. This might be, create some issues, for other countries in the world. But look at this number only. I think still we have to say that the strongest number in almost 5 years. This is actually a very good start of the China's export story, and also it's good for investors to buy in China's global story. This is also kind of important because, not only this year, but also in the past 2 years, 3 years, when investors talk about China, they're always concerned that, okay, because of tariff, because of the geopolitical tensions, China's trade numbers won't be good. But in the past few years, we always see that continue to be upside surprise to investors. This, I think, at least will help, people to reframe some of the Chinese go broad story.
Okay. Go bullish in the goal.
Still a positive story.
Exports still. Exports will still. Hao Zhou, thank you.
Thank you.
Fantastic. Hao Zhou, the economist at Guotai Haitong Securities. Just ahead, Cathay Pacific. What are the companies set to report earnings today? We'll get you a preview coming up next. Right, welcome back. Cathay Pacific set to report results, up 3% in the first 20 minutes of trade here. We're looking at profit growth, annual profit growth, perhaps the first one in quite a bit of time here. Investors, though, may be more focused on the company's views on the impact of the war in Iran, whether that's on the cost side or some of these ticket prices, which, of course, that have been substantially higher. Eye-popping, to say the least. If you don't take my word for it, just go on the app and try and book a flight to London. Tell me what that tells you. All right. Daniel Lee is here with us, our Asia Aviation and Transport reporter, to talk us through the industry dynamics and how that affects the company.
Yeah, we're hearing a lot already from airlines in this region of the world about having to raise airfares. If you're Qantas, they're going to be raising airfares by 5% this week. That's not small by any means, given where prices are now elevated. And you have a number of airlines who are either introducing or raising surcharges, fuel surcharges on overall prices. So this is a clearly painful moment for the consumer if you're looking to travel, because in the near term, price is elevated and ultimately prices are going higher. And so when you look at Cathay's earnings today, a lot has to be said for what management will have to say on the impact of the war and on the impact on its bottom line.
Yeah, I think JPMorgan had a pretty interesting note talking about, Cathay, Singair, they're likely to stand out given that they have strong balance sheets. Their hedging strategies are prudent. And really, it's more about traffic reallocation than any sort of structural sort of risks. I'm just wondering, how does Cathay stand out in terms of how they approach this Iran situation compared to other airlines? When you look at how the Gulf shutdown has taken up around 10% of international capacity worldwide, and that's all through the Gulf carriers, the spillover effect really helps the likes of Cathay and even Singapore Airlines. When you have them as big transit carriers, they can pick up a lot of demand. But their flights are already fairly full, 85, 90% full. And they would have seen a lot of their flights being pretty much
sold out in recent days. They're adding on extra flights. Cathay announced extra flights to London and to some parts of Europe. So they're doing well. However, there is still a balance to be brought with the overall cost of the impact of oil, which they are going to have to balance with. Clearly, they have been hedging. In the past, they've not hedged so well. But have they hedged enough to mitigate the costs of these surging oil prices is another question.
Danny, thank you. Danny Lee there, our Asia Aviation and Transport reporter on the latest on what to expect out of these Cathay earnings coming up. In terms of what we're looking at heading into this break, it is, we're seeing when it comes to onshore markets, we're relatively flat here this morning, the CSI 300. Hang Seng also just slightly to the upside, so not too much risk on. It seems like the situation in Iran is still really weighing on investor minds here right now, and we'll kind of get a check on HS Tech coming up. We're just about a third of 1% higher here. So yesterday, you saw the likes of Minimax up some 20%, definitely moderated a little bit here on this Wednesday morning. This is Bloomberg.
Right, just a look at some of the early gainers right now to the upside. CATL really having a really good 2 days right now, so we're up further 5% today. Shinny Solar and Sunny Optical, despite of course the similarity and part of those names have almost nothing in common. But that's just to say the other thing in common is if we're looking at upside there. On those two stocks, we're still focused in on Tencent, still also on the upside last we checked. There we go. Okay, but we are giving up most of the early gains right now. NIO, though, is still holding on to, again, substantial gains coming through following the earnings and then following upgrades coming through from the analyst community.
Yeah, first ever profit, certainly for the EV maker. That is enough for it to be up some 15% and continue to hold those gains here. But yeah, it is still that OpenClaw effect on HS Tech that continues for some of these tech giants. It's a different story for some of the startups, which really did rally massively yesterday already as well. But yes, we'll have much more on the way in the next hour. Talk a little bit more about lobsters.
Yes.
Maybe
Xiao Long Xia.
Yeah. This is the China Show. Welcome back to the China Show. Here's a look at the HSI half hour into the session, and we have come off from the initial highs here, and we are losing a bit of steam here. We're just up about 1/10%. Although it is interesting to note, though, when it comes to the southbound flows today, early on, we're already seeing mainland investors as net buyers of stocks here in the city. So at least that's a positive sign that maybe there is still some support given from the southbound flows. But right now, the rest of Asia, I think we're still trying to digest what this whipsaw in oil markets, given the confusing messages from the U.S. about what their strategy is in Iran. And then you square that with this journal report about the IEA set to release its largest ever release of reserves to try to calm these markets. Yeah, it's a bit of a head turn there, Dave. What's going on?
It really is, right? Because it's such a massive number that is being prepared to be injected into the market when the market is really looking for simply a small number of vessels going through that strait, right? And that goes into this massive other number that's coming through in terms of that other report. I think it's from CNN that talks about naval mines out of Iran. There's a deleted social post to get into as well. And, a case in point is, yes, the Nikkei's up too. We're also up on the Nikkei Vol Index, which is quite rare. You see that parallel, same direction on the same day. Kospi's on the way up, outperforming today. Taiwan is up about 3%. We're coming off quite steep selling, I believe, in Taiwan yesterday, which is the same case when you look at Hong Kong. Relevant information as far as what Yvonne was just pointing out, right? Net buyers early in Hong Kong today. Okay, U.S. and European futures, how are we doing? About, okay, we're mixed, the same as the mixed messaging we're getting coming through out of Washington, D.C. Oil is, here's the thing on oil, right? So I think we're looking at the biggest swings in oil going back to 2022. That's when, of course, the Ukraine invasion began. But still, if you split the difference and say things de-escalate from here, and let's just say we go back to $80 on Brent, we're still up 30% for the year. So the inflation story actually does not go away. right? If you think about it in that context. And do you look through that from a central banker perspective, right? Dollar's weaker right now. We're still following as well this theme of OpenClaw. And it's still playing out across A shares coming up on your screens. Tencent should also be coming up too there. Despite, you have widespread adoption. It's making its rounds on social media. You have regulators chiming in and warning about the risks to this. The market is still running with a theme largely as well. These are A shares you're looking at related to that, including, of course, Tencent. Was up 7. We were up 4. We're now up just 1.6% about 30 minutes into the session today here.
Yeah, I encourage everyone to read the Tech in Depth sort of newsletter came through, that written by our very own colleague Zhiping Huang, about why China has been so embracing, in terms of this whole technology. And certainly this latest mania gripping Chinese tech circles is this whole term of, quote, raising lobsters. I don't know if you've seen that lobster emoji around some of the social media that's been circling around. And we're not talking about farming crustaceans, right? OpenClaw is the name of this software that is really generating this excitement here right now. And what is it? Well, it's basically an AI agent that helps users write emails, organize emails, or even set reminders as well. So even help you make restaurant reservations, and not through a chat bot, right? You don't have to chat to do it. It does it automatically. So when it comes to the fact that it is also open source, it is something that China has been yearning for in some ways, because we are looking for that next big catalyst in this whole AI wave, the time when we're still waiting for this next successor of DeepSeek. Could this be the next big hit, right? And we're seeing that being reflected in these markets, right? Where big tech firms have also adopted the tool and released their own versions. And the excitement over this is really being reflected in the stock price. Right, we talked about Tencent, Baidu, all them talking about how they're tweaking either their own models or they're finding ways to deploy it as well. Minimax, which continues to surge double digits here in just 1 week alone, was talking about ways to really increase and boost their own models and the like. So it's not just that, right? Local governments have also chimed in. When you have the cities and districts from Shenzhen, Wuxi are also offering subsidies in the multi-million dollars of yuan to startups leveraging OpenClaw to make advances. So there's a lot going on in this space here. Can we bring up the video? Do we have the video of the lobsters, right? I mean, that's where you start to see it's almost like
the lobster hats.
The cult-like sort of following that it has.
Oh, there we go. Was it this one?
Yes.
Okay.
And Zhiping talked about he attended one of these sort of meetings, OpenClaw meetings in Beijing.
Zhipu, I think. Yeah.
And it fit the theme, right? Not just, when it comes to not just the hats, they were serving spicy crayfish, given the whole cloth theme and the like. And it just shows you how much people are really kind of embracing this sort of technology and software right now.
Yeah. And, a lot of it has taken place under the radar because most of the world was focused in on events in the Middle East.
Yeah.
And we're
Look
here
at this.
today.
This is just like mom and pops outside.
Oh, yeah.
Waiting for their, with their laptops, waiting to find some way to at least download
it,
or at
right?
least, and it really brings back the time of this kind of really frenzy around tech in China, maybe before that crackdown in 2020, when there was so much excitement about delivery platforms and bike sharing and the like. It kind of has that reminiscence here right now. And really kind of, is this really the next big thing is a big question, of course.
Yeah, well, I mean, if you have hats like that, it better be. it better be, right?
I think we should all get those hats.
Yeah, well, I need that. I need that just given how vertically challenged I am just in terms of height. Now, it's not all enthusiasm, of course, as Yvonne was just pointing out there, right? You are getting also some warnings coming through from Chinese regulators. In fact, when you look at this, and a cautious tone coming through, the country's Ministry of Industry and Information Tech has warned that some deployments pose significant security risks. In an interview with the People's Daily, an expert from China's MIIT says that users in finance and energy are quite susceptible to possible leaks, which could result in substantial financial losses. So, just keep calling your risk officer. I think is a key message here as well. Here.
Yeah, let's bring in our Bloomberg Intelligence senior analyst Robert Lee. He thinks Tencent and Alibaba could face a hit from OpenClaw use. He joins us now. Okay. Before we get to the poo-pooing, tell us what's all the excitement about OpenClaw. Why do you think China has embraced this so fiercely?
Just because I'm a weather-beaten,
I know.
dour British
You're the
person,
voice
you
of
bring
reason.
me on. Yeah. Okay,
You're the voice of
joking
reason,
aside, I'll
yeah.
try to give a more realistic view.
Sure.
And most importantly, as with everything in AI on the software side, the key question is when are these companies going to make money? So the rising adoption of AI agents as catalyzed by OpenClaw has to be a good thing in terms of increasing user engagement and general usage of these tools. But I think, as has been widely understood in the markets, AI agents consume a large amount of tokens. These are the basic units that are processed in the back end by NVIDIA chips or whatever it may be. So the token consumption or computational consumption of these AI agents is extremely high. Somebody has to bear the cost. And ultimately, that's the cloud companies. Because the API pricing, which relates directly to token consumption, is heavily subsidized in China. The market API pricing in China is somewhere in the region of 90 to 95% below their Western competitors. So these are loss-leading services. Hence, what I published yesterday, that the API-related or cloud-related losses coming from the increasing use of these services will increase, and that will have some margin dent. Less so with the big guys like Alibaba and Tencent, but certainly the smaller guys, Minimax and Jupu, their operating losses will increase on the back of this.
Is there a path to profitability for the smaller players?
Well, ultimately, we need to see a consolidation in the sector because, again, OpenClaw is really interesting. Again, I think it's good for the consumer. It's a great agent to drive efficiency, in terms of everybody's working life, whether that is on a personal front or from a business perspective.
Right.
But they're essentially giving these tools away, maybe not for free, but at a very, very low subsidized cost. So until you see a consolidation in the sector, then based on a technology or OpenClaw that is available to everyone, because you name it, every single large and small AI company in China has rolled out an OpenClaw product. So going back to basics, how do you differentiate yourself when all your key competitors are rolling out very similar products in a market that is already suffering from huge oversupply and commoditization? So, I mean, I've clearly rained on the parade here, but I'm trying to give a realistic view as to when these companies are really going to monetize increasing use of AI agents. That still remains some way off. So until we see consolidation, that isn't going to happen.
So in terms of where we are in the AI sector in China, who do you think is likely going to be the winners? Is it still going to be the tech giants, or do you look at the Zhipus and the Minimaxes and maybe see a bit more promise there?
These two, as you showed in your intro, I mean, the stock prices have performed phenomenally well, but we must bear in mind that we are in retail-driven markets. These are small-cap companies. This is not unknown. For those of you who know the China market well, look at a stock like 20HK, SenseTime. Similarly, after IPOing this thing, I don't remember off the top of my head, went up 5-10 times. In the subsequent years, it performed less strongly. Once the hype had evaporated. So I think these smaller companies are interesting in their own right, but they lack scale. And I would argue that they lack the ability to carve out a defensible niche, which is one of the key qualities you need to see in any technology company. So it's going to be very hard for them going against these big guys to monetize and to drive earnings in the long run. So yeah, it's a pretty boring answer, but the big guys have got huge balance sheets, huge R&D resources to apply these tools and enhance the functionality of their tools. The consumer's a winner, but they've got the huge reserves, financial and R&D resources to fund that. Just to give you one statistic, Tencent has got around 80,000 R&D engineers across its entire business. Minimax, not picking on them, has got 300. So they've done incredibly well, but in the long run, I think they're going to find it very hard to compete with these huge tech Goliaths, which dominate every aspect of the software and cloud sector in China.
Yeah, 300 against 80,000. That sounds like a movie with the Spartans involved a few years back, wasn't it? Banter, of course. Robert Lee, thank you so much, our senior analyst. I just had a look at the statistic out of Robert here. 20HK, yes. I mean, we were at $8 on SenseTime in the early goings. We're now at $232. All right, so what is the selection process that one uses to pick out the winners and losers, or future winners, rather. Oliver Cox is with us here on set, portfolio manager at JPMorgan Asset Management, runs a few strategies that dovetails into these big teams. Very nice to see you. Good morning.
Thanks very much indeed for having me, guys.
I hope
Big fan of the show. Great to be here.
Good to have you on the show.
Yeah. Thank you so much. It's about to get better with you here.
Wow.
I wonder if you eavesdropped just now with our conversation here with Robert. So how do you pick the winners?
I mean, I'd agree with a lot of what Robert said there. I think it's still, the big picture in tech is we're still very, very early days in this agentic era, this shift to agents being deployed. I mean, the way I think about it is Claude Code, I think that's the most impactful tech product I've seen probably since the iPhone in 2007. So when ChatGPT started in 2022, people talked a lot about the ChatGPT moment, and that really kicked off this AI cycle. I think Claude Code it's kind of like a ChatGPT moment for the enterprise. I think where you're going to see most of the monetization and the adoption really have a big impact is in some of these white-collar workforce settings within the enterprise. As some of the big software companies roll this tool out, I think you're going to see companies, in particular government and the enterprise layer, that's where you're going to see a huge amount of usage, and that's where the monetization is really going to show up. So in terms of gauging that and assessing that, it's very, very early days. We're still kind of in the first innings, the first 3 months of this really this really diffusing and these tools getting out into people's hands, but certainly something we're going to be watching for in results to come and every interaction, particularly with the software companies, is how are you monetizing it? What are people doing? We're getting some early signs of that in the US, but it's a fascinating time to be kind of looking at that activity really kicking off in China.
How are you looking at it in the China AI space then?
Well, I think obviously the headlines, I saw the photos and the video you had just now with people with the lobster hats on, all the rest of it. That's going to take a lot of the headlines. And you'll see certainly people use these tools in terms of booking travel or using it to update their calendar or sorting out their emails or their media. But I think where you can see the much more value add and really put some hard numbers on that will be when you start to see companies get a lot more efficiency and increased productivity when they deploy these agents in their daily workflows. So we can already see some early signs of that, particularly in the US, to a certain extent in Europe, and now that wave is really starting to hit in China. Yeah.
So what are your overweights on the tech side? If you can't give us names, just maybe describe where in the sector you are.
Well, for this region and the strategies that we have invested within Asia-Pac tech per se, specifically, I think the biggest point to make there is still, I mean, the fundamentals really center on the build-out of AI data centers. That CapEx story, the big US hyperscalers, where are we within that cycle? Just to break it down in terms of demand and supply, what are agents doing? They're increasing demand, as Robert said, for tokens, for compute. So demand looks extremely strong, and the agent activity is really kind of boosting that at the margin in the short run. And then on the supply side, I think we all know that the supply side has been catching up. Yeah. So be it in semis, in hardware, servers, it's a great time to be a supplier of AI-related hardware in the Asia region. So that balance has actually even shifted to an even more tight situation as a result of all this agent activity kicking off. So I think when you look at it, my view is that we're still very mid-cycle. And because we have that mid-cycle view...
In the build-out process.
So demand is still very, very strong. If not anything, getting stronger recently. We're still undersupplied at the margin. So if we're mid-cycle, that means, from my perspective, any price correction or challenge that we might see, pullback, that's really a chance to buy, to increase exposure. And so I have actually been looking to increase exposure to that AI data center demand build-out exposed supply chain over the past couple of weeks.
You guys have a very interesting estimates on this. You know, of $1 of capex that's spent, and I think one part of my question there is, can we trust the capex number now? Still, how much of that goes into the Asia supply chain?
Yeah, well, just to sign off on the capex story, I think overnight we saw a very significant bond offering from Amazon. So we're starting to see those US hyperscalers not only tap their own cash flow, but look to the debt markets. Yeah. I think there was a 50-year bond deal, so the demand, as far as I could see, was very, very high. That was an oversubscribed deal. I think we're going to see more of those to come forward. Also, just listening to what your U.S. commentators on the Bloomberg Tech Show, which I did listen to this morning on a podcast, they were talking about particularly European investors being a big driver of that demand. And the reason for that is within Europe, it's very, very hard to get equity exposure to the AI build-out. They don't have the hyperscalers to invest in. They don't have the supply chain to invest in that we do in this region. So the bond route is really the key way for European investors to get exposure there, yeah.
All right. Oliver, we'll have more with you. Oliver Cox there, portfolio manager at JPMorgan Asset Management. He's sticking around. Still ahead on the China show, more on AI and the cloud computing sector in China with Tuya Smart co-founder Alex Yang joining us later on this hour. This is Bloomberg.
Right, still with us here on set, Oliver Cox, portfolio manager at JPMorgan Asset Management. We were just talking about, for every dollar that's spent, 40 cents.
Yeah, we think
the CapEx spend goes to Asia. Talk to us a little bit more about that.
Yeah, so our analysis of the supply chain and what we see at the moment is that for every dollar spent by the US hyperscalers, we think approximately 40 to 50% of that is coming directly into the Asia supply chain. So that's the familiar names within Korea, within Taiwan, also Japan, but also the China hardware players as well. So I think the China AI story, obviously the big software companies, they take most of the headlines, everything that's going around with agents at the moment this week. But on the ground, there are some fantastic, very, very strong, very, very important for the AI supply chain hardware and component companies as well. So it's a range of companies, yeah, but the rule of thumb at the moment, for every dollar that the hyperscalers are spending, 40, 50% is coming straight into the supply chain in this region. It gets reinvested. There's a ripple effect to that.
So I know you've been taking advantage of these sort of corrections to really buy on these dips here. So where are we in this whole AI tech hardware cycle? Is it just early innings?
With 3 years, just over 3 years since ChatGPT launched, as I mentioned before, Claude Code is really what I see as the ChatGPT moment for the enterprise. And I think we're going to see a ton more building, more apps, and more of these agents rolling out. So we're still very early in that phase of enterprises really adopting AI. So I think overall we're still very mid-cycle as I see it. That build-out is still going to continue. Companies will see value from these tools. They're already seeing value from these tools. And so we're still relatively early in that build-out. So overall still mid-cycle for the hardware supply chain.
Does the thesis, and here's the macro overlay, does the thesis hold up if we get higher interest rates, which is still a tail risk, but there's a conversation there that higher rates will not justify the valuations, even if the underlying story is as robust as you alluded to? Yeah,
I think if we get higher interest rates or a real shift into, say, a stronger dollar environment, that's going to be a bit of a challenge for markets in this region. I think we all know the relationship between the weaker dollar and how much of a tailwind that can be for emerging markets in Asia Pacific. So I think if that macro environment really shifts back to, say, what we've seen for much of the last 15 years when we were in a strong dollar cycle, most of the capital, most of the investment around the world did go into US equities, and we've started to see that shift back over the past 6 months, people considering much more of an international allocation. And of course, I think we've been beneficiaries of that. China, Asia Pacific region has been a beneficiary of that. But I think if we see a prolonged higher interest rate or higher inflation cycle, that would be a challenge overall. Yeah.
Talk to me about gaming.
Yeah.
Why are you looking at gaming now?
Well, apart from the AI supply chain and Claude Code and lobsters, I think the other big story within tech over the last 3 months has been disruption, so AI disruption. So we've seen a number of software companies correcting as the market has put a big question mark over this emerging risk of disruption to their core business? Is the moat as high as we thought? Are the barriers to entry as high as we thought? Is the cash flow going to be secure? My perspective on that is there's been a number of, to kind of phrase, babies which have been thrown out with the bathwater. I think we've seen a number of companies which have been unfairly punished. And the gaming sector in particular, which is a big portion of tech in this region, really stands out. You've seen valuations correct. I think the business model, the moats that they have there, it's all about IP, a really long relationship with the consumer who've been playing these games since they were children. When they get older, they have more disposable income. They're more willing to spend more money on games. I think that fundamental story is intact. So we've been taking advantage of the correction in that area. Yeah.
Oliver, it's great to have you. Come back, please.
Look
Oliver
forward
Cox,
to it.
portfolio manager at JPMorgan Asset Management. He was talking about IPs, right? You got to talk about Nintendo stock here today.
Yes.
It is surging as much as 10% at one point, and really the steepest ascent since April. There is this surprise success of this new Pokemon game.
Oh, is it down to that?
On the Switch 2 console there. Pokemon Pocopia.
Oh.
It's been a hit.
All right, put that on a t-shirt.
Yeah, but you can watch more, of course, on our video hub as well. This is Bloomberg.
Right, welcome back. We're looking at machinery stocks. In fact, machine tool makers specifically. There's a CCTV report talking about the sharp pickup in orders early this year, and some of them are booked through. A plant in the Guangzhou province is booked through September based on that report. So Guangzhou specifically, it's not a province, it's called Guangdong. But anyway, of course, just to wrap that story for you there. We're headed to the break in Japan. More on that in a moment. This is Bloomberg.
The report so far is that the IEA is planning the biggest ever release, and the number out there is, so it would be somewhere north of 180 million barrels. What we have lost, more than 10 days of war, very easy calculation, about 20 million barrels per day that flows through the Strait of Hormuz. We are now past 10 days of the war. The market has already lost about 200 million barrels, give or take. If the IEA countries release that much of oil, and a separate question over what period of time they'll be able to release all that, that would simply make up what the market has already lost. Then every single day after that the war continues and the strait remains closed, what do we do?
Vonda Insights, Vandana Harry, of course, joining us earlier here on Bloomberg Television a few hours back. In fact, if you just caught that there, she was doing the calculations on live TV in her head as that news broke. Fantastic piece of analysis immediately just to help us understand what the important headline is, because there's so many headlines out there, one after the other, even simultaneously, that's really led to Brent currently at vol levels, 10-day vol, historic levels when you compare things to previous wars. You have Ukraine and Desert Storm, obviously, are very, very high as far as that's concerned. GFC and the pandemic hitting are also part of the circles you see on your screens. And we are, of course, at the yellow level. Joining us out of Singapore is our oil trading reporter, Rong Wei. Neo is here as we look at the oil price right now. And yeah, there's a big number, 180 plus, that could hit the market, and it could, maybe not enough to offset the big number that we've lost offline. But isn't the issue, though, that the oil is there, it just can't be shipped around the world?
Right, so David, as you rightfully pointed out, although this headlines of IEA wanting to release, possibly releasing a whole horde of emergency stockpiles had indeed shifted the market, but testament to how the market sentiments toward this announcement is, we have quickly seen oil prices for both benchmarks swing back into the green. Now that comes as the market digests how much these oil, when released into the market, will actually help to alleviate the supply crunch. As you rightfully pointed out, more importantly, the issue or the pain points on hand is still the fact that a lot of these tankers are stuck due to the dangerous conditions along the Strait of Hormuz. And that ultimately is still the key factor or the biggest supply risks that is affecting oil markets today.
Okay, there's so many things to look at, whether it's what the U.S. has said about escorting tankers around, and that seemed to have been taken down. And then there was where we are in terms of military operations. I mean, what is your team watching out for the most that could actually calm these markets down?
And as you have rightfully pointed out earlier as well, we have been seeing, I would call it unprecedented volatility in oil markets. Oil prices are reacting and swinging according to these headlines. But as the market calms down and digests what these actually mean, we would see that actually what really matters here for oil markets is still the fundamentals. And when I talk about fundamentals, it really, what I'm really referring to is the actual production and supply of crude oil. So what my team is currently looking at are still mainly the physical factors as the war rages on. A lot of these oil infrastructures in the Middle East are still being hit. Of course, most recently we have Ruwais. After that, where ADNOC is still assessing, but Ruwais is one of the largest refineries that can process nearly 1 million barrels a day of oil. And really the impact of such a huge oil infrastructure being hit has been felt across, ripples have been felt across in the markets, especially for one of its largest buyers here in Asia.
We just got this headline about 30 minutes back. The Saudis have said they've intercepted, there are two numbers here, but I'll go with a smaller number, 2 drones heading towards one of their oil fields. What is our understanding currently about the amount of capacity that is, let's call it semi-permanently offline?
Right, so a lot of these barrels in the Middle East, of course, we're reacting to a lot of headlines, and really all these numbers are highly dependent on how these companies on the ground are assessing the damage. So I would say that a lot of these estimates we are getting across the headlines, in the wire, in the terminal, are kind of rough estimates for now. But what I can say for sure is that your key Middle Eastern oil producers, a lot of them have drastically cut production. All these cuts are highly significant, and although we may see day-to-day deadlines, maybe by the minute, by the hour, of certain infrastructure being hit, but I do have to caution you to say that it will take time for these refiners to assess the damage, whether key infrastructure is being impacted, whether it's a production facility or is it a storage facility. Of course, the latter being a bit, I would say, more bullish for oil. So as we wrap our heads around all these different announcements, I think the key takeaway is that the Middle Eastern producers are reacting, and real tangible physical cuts in production has been made over the course of this war.
Rongwei, thank you. Rongwei Neo there, our oil trading reporter on, this sort of fog that we're all kind of in.
Proper fog.
And really reacting to things literally in real time. Of course, Iran is also the topic of today's Big Take, which looks at how the U.S. has been forced to dig deep into its expensive military inventory to counter Tehran's arsenal of missiles and drones. You can check it out on the terminal if you're a subscriber or on our website, Bloomberg.com.
Coming up as well, Alex Yang, Tuya Smart, out with earnings a few days ago, and we'll help unpack, given all the news flow too, right? How does this affect them, what their plans are, successful across most financial metrics, their targets this year. This is Bloomberg. Okay, let's have a look at how we're doing in as far as some of these stocks are concerned. So Tencent, Zhipu, Minimax on your screens. Wow, all over the place, right? So initially the bottom two were down. Zhipu is now up. Tencent has about half its early gains, 1.5% to the upside here. One other stock we're tracking amidst, of course, the spotlight properly back on the broader theme of AI. is Tuya also coming up on your screens very, very shortly. A couple of days ago, out with some earnings. Fantastic set of numbers here. That's a snapshot, of course, of the company itself. In fact, the co-founder of the company Tuya Smart is here with us on set. Alex Young, COO, and also the CFO of the U.S. and Hong Kong listed firm, reported fourth quarter results last week. Very nice to see you and good morning. And clearly, I'm just looking at the set of numbers that you guys reported. It's been financially good for you guys reporting growth. So can you guys continue the momentum?
Yes.
In 2026?
Yes. We already see the momentum starting to getting better because last year we know that it kind of the turbulent year comes out with all those kind of different type of trading conflicts and challenge out there. But this year that is coming back. The market become more steady, then all the merchants know that how they can rebound. I think from a very concerned year, in 2025. So the momentum continues and the AI continues.
Yeah, I was going to ask you about AI. You just launched this AI-powered assistant, Hey Tuya, at CES. Yeah. Tell us a bit more about it. It seems like you are really wrapping up your AI adoption here right now. What are some of the verticals, some of the use cases that you're seeing as gaining the most traction now?
I think that the AI for us will go into two major type of directions. The first one is that we'll combine the AI capability along with the hardware. So the hardware contains more, capability how to help make life easier. So before that, it's more like the preset program, like the IoT applications. So all those kind of scenarios are kind of the preset or scheduled in that scenario. But right coming on with the NM capabilities, it becomes self-aware and self-responsive. So without annoying you, that asking you, okay, what you going to do with this? So after you give them some input, so they can do that automatically for you. So that's the first one. Okay. And the second one is on the interfacing level. So that's why we introduced the Hey Tuya. So we believe that combined with the LLM capabilities, the hardware will be easier to use. So I think that right now, one of the key barriers for the adoptions and the penetration of the smart devices is still kind of difficult to use, especially for the elders and for the very young age people like my son. So they're still not, okay, I need to learn different application interfaces to interface with the different type of hardware. That's still kind of the challenging for them. But coming on with the NNM, it can be a very natural interfacing. So you just talk instead of tap to those devices and adding to work for you.
Okay. And as far as, so like as a CEO and a CFO, of course, you're also looking at things like predictable revenue, stable revenues, and of course some of the growth areas as well. So talk to us about those two things in terms of growth and some of the premium services that I understand, of course, you're also looking to leverage.
Yeah, correct. I think that's the first one, the key drivers for Tuya coming on all the way is that, so because we are the B2B enablers for the developers, help them to build the smart devices easily. So the key drivers will be adoption of smart devices. So you believe in that smart home portfolios will become a promising after 10 years, right? So right now coming on with the AI, we already see that we'll have the devices come with more values that helping people to solve more pain points easily, that more people starting to use those type of things. And through that demands growth, and we have more and more players in the industry, new brands, new startup teams, and different type of manufacturers. They're starting to transit their legacy, what they call legacy hardware portfolios into the smart hardware portfolios. So that will be the key drivers. So we offer them the toolkits to help them to get through those barriers on the technical challenge, go through all the technical challenge, and to make it done.
There's been so much hype around OpenClaw. I'm just wondering, have you been using it? Have you been deploying it in your business in any way?
I think that's not for the commercial usage. And for me personally, I had a Claw on my very old MacBook, and helped me to deal with some regular stuff like to collecting all those kind of news and giving the summary for that, like every day when the market's open, etc. But I think that would be the typical scenarios in the beginning, maybe 2 years ago. People don't know what to do with AI. Even though that would be a very expensive event spend, and a lot of large companies talking about it and say that's a feature. A lot of people don't know what will be the real scenarios to use that. I think OpenClaw will be only one of the use cases that help people understand how AI can open the door. We believe that will be hundreds of thousands of more of them. and to help people do that. So what we do is we keep searching what will be specific scenarios people require for some type of services.
Right.
And we provide a very standardized and stable and commercialized use cases to ensure that we can provide it in a very promising and safe way. So that's what we can talking back to some of the recurring services we put on top of the Tuya.
Right. I'd love to hear a real life example because I think you're right. Because the people, it's almost like for a company like yourself, you almost are looking to see how people's behaviors change. Correct. And how they interact with, I don't know, their air conditioner that's at home.
Correct.
And how that changes and whether or not I need to worry about the temperature at home when I'm here at work. So talk to us about what changes you think you can predict users will eventually come to adopt.
Yeah, maybe I'll give you two use cases.
Go.
Like for home, right now we have so many smart home devices being adopted to the global market.
Right.
Nearly a billion devices. We have hundreds of millions of users out there. And very simple use cases will be robotic vacuum, right? We know that we don't want to do cleaning works. No people that like to do that. So robotic vacuum seems to help that.
Yes.
But you know how my wife uses that? Because right now we have the robotic vacuum come with a floor plan with the different mapping systems and navigations. Okay. But
so a very smart robot vacuum.
Correct.
Okay.
But the way my wife uses that, when my son and speaks some milk on the dining room.
Okay.
The way my wife uses that to call, hey, Alex, can you call your robotic vacuum to clean the dining room?
Wait, Alex is your son or the vacuum? Sorry.
That's me.
Oh, that's you. Okay. I'm just making sure. Okay.
The reason being?
Yes. Okay.
Because I don't want to learn the application.
Right? I don't want to know if she named it after you. But okay.
People do name their vacuums.
Yes.
So yes.
Okay, that's me.
Okay.
But so she found that the easier way is that instead of learning the applications, how to open the vacuum, how to select the map and select the exactly locations that what the vacuum to do, call me to do that. So coming out with Hey Tuya right now. Okay, your husband is away. Okay, forget about husband. Call Hey Tuya to do that. So right now she can say that, Hey Tuya, get the robots clean my dining room. Okay, so the AI system will help her figuring out what will be exactly the comments to do what actions and give the feedback.
Okay.
So that would be one use cases. So I believe that right now still around 90% of the populations globally, they're not smart home user.
Yeah.
Because they think it's still kind of annoying for them or still kind of a challenge for them to learn how to use that through different apps. So instead of tap and swipe, right now they just talk.
Instead of tap and swipe, you just talk.
Yeah, just order.
Oh gosh,
it's but don't order the husband.
But it's
order the robot.
Scary at the same time. In terms of just challenges ahead, I mean, what do you think is going to be the biggest sort of challenge for you? Is it competition, given that there are many players when it comes to AI and the adoption of AI? Is it going to be supply chain, just given some of the constraints that we're seeing in hardware and the like here, or is there something like externally like tariffs that is still top of mind? What do you think is the biggest challenge for the business?
I think the largest challenge is still that how fast the adoption will be to taking places. And because we spent 10 years, from establishing of the company, we have the vision. We always kind of wait for 10 years until the industry is starting to get more spotlight. And we have kind of over 10% of that penetrations all over the world. But still over 10 years. Is that I think the key challenge is that how fast we can make the technology being easier enough for majority of the people. And maybe LLM will help, but we still have a lot of gaps on the technology tree. We need to let up. That's for that. But for the short term, I'll describe as more as a turbulence. So including the tariff, including all those kind of regional conflicts, including the supply chain, like the concerns, right? Short-term turbulence will come over. Will take places all over the time, but it's only short time. So we don't have much worry about that. And we're welcome for more players in the industry. If you imagine, we describe that what we're doing, it will become a default infrastructure or default features for all industry that are related to hardware. And how many players should be 100 times more. So we'll have more players, we'll have more guys to be able to join into pushing the innovation forward and to do better on the market educations to bring the confident mind for the consumers. If the consumer, you see that everybody doing that, they feel more safe, right?
Alex, it's great to have you. Alex Young there, co-founder, CEO, and CFO at Tuya Smart. Now, coming up, BYD is said to be thinking about a foray into Formula One to boost the brand's appeal globally. We have the details coming up next. This is Bloomberg.
Right. The Chinese Grand Prix is actually set for Shanghai this coming weekend, of course, and perhaps in the future we might see BYD among the cars burning rubber on the circuit there. That's because the automaker is said to be examining options here to enter Formula One.
Yeah, Linda Liu is our China automotive reporter, joins us now. Obviously there's a lot of brand recognition involved, but what is going to be the appeal for BYD to enter something like F1?
I think exactly like you said, if BYD decide to, enter into the F1, maybe considering building their own team or buying into a season, that means millions of viewers around the world, could be accessible through, the presence in these races. And, fans get very passionate about, supporting their own teams. So these are all cachet that BYD really wants to access as it pushes up its luxury branding, because right now, as we know, BYD in China especially is still known as a mass market brand. It's got this long association for being ride-hailing cars. So I think BYD is trying to assess options for shaking up, its mass market image.
It's clearly not going to be this weekend because that's quite soon. But do we have a rough timeline? I know it's still very, very early
Or the
stages.
next season of Drive to Survive.
Oh, yes, if they could make that cut, right?
Yeah, so part of the consideration for BYD is the amount of investments you might need to spend into, if they're considering building up a team, maybe more, economical option would be for BYD maybe buying into an existing team or do some partnerships, as we've seen with other Chinese automakers have done in the past, such as Geely. Other than F1, BYD may also look to Le Mans, the really famous endurance racing. So there are several options out there for BYD, and I think it's probably going to really assess, the amount of investments required versus the payoff they might get.
Tell us more about the luxury push. How's that going for BYD now?
So I think it's a bit of a slow process for BYD, given that, they've been known as this affordable brand for such a long time. In the beginning, even compared against Tesla, they were seen as the more affordable, cheaper option. But now BYD has launched these very expensive upmarket brands, such as the Yangwang series, which is priced at 1 million yuan or above. And BYD has also built racing tracks in China, hoping to really attract customers with this need for speed, more upscale customers, that maybe wouldn't have considered BYD before. But now with more expensive offerings, BYD is really hoping to get better margins from these brands.
All right, Linda, thank you. Linda Liu there, our automotive reporter. On all things, BYD, maybe they'll make it to the next season of Drive to Survive? I don't know. And then do they bring back a Chinese driver to drive it, right? Oh,
yeah. And do they take Monaco, if you think about it? BYD
Zhou Guanyu, it was pretty short-lived, but yes. We need some more Chinese presence in the F1. Speaking of which, of course, there you go. There he is. We've been talking about battery stocks, obviously. There's been certainly some bright spots in all this here as we tilt more to the EV space, I guess. But take a look at when it comes to CATL and NIO results. That really talked about the energy independence that China has. Optical names also were stronger here because of Oracle server demands and what we saw in some of those indications there. So certainly those things are rallying quite hard here today in China.
Yeah, it's been a really good 2 days here for CATL, right? And I think Tencent, not the same can be said. I think we're still up, but not to the extent of yesterday, which is perhaps why when you look at Hang Seng Index, we are coming off highs already as far as that's concerned. Obviously, we still, actually, no, my mistake. We did see a leg high here just now, and I wonder actually why. Okay, let's have a look at what's going on underneath the hood. We are entering the last hour of the morning session, so it is quite early there. So CATL is leading that, Geely among the big names, of course, moving to the upside. MSCI Asia Pacific, 1.7%, so the rally continues across the region, the Asian equity complex here.
Yep, that's it for us here on The China Show. Insight is next. Stay with us.